What's up everybody, Investing Club here, back with another video. So after my last video that I uploaded, which got a lot more views than usual, and in that video, one of the last videos I updated got a lot more views than usual. So basically in that video, what I was saying was that this run we are having with the stock market is unsustainable, and that there's a large body of evidence showing that we should be making a move lower in the near future. And so in response to that, a lot of people left comments saying, so what does this mean for the stocks I have? Should I sell my stocks? Should I not be buying any stocks? Should I have gold? What does that mean for my portfolio? To clear up any misconceptions about that video, because I do not want people to be taking away a different message from that video than I intended to make. So just before we start the video, quick announcement. I have created an Instagram page, and I will be answering any DMs I get for the next 24 hours. It is Investing Club USA. So if you follow the page, like the first post, and comment the stock which is your largest holding, I will answer any questions you have. Just send them by DM and I will get back to you. So now a quick note about why the market is going up. So I've said in the past that I think the market will go eventually much lower than it was in March. But here's the big thing. The market doesn't care what I think. And the market doesn't care what you think either. I think this is an important concept to understand as an investor, that the market doesn't care what you think and it doesn't care what I think. And if you think the market does care what you think, you're probably going to lose money eventually. That I think the stock market will go down, no one cares. Stocks won't go down just because I think they will. All right, the truth is that financial markets, like the stock market, are made up of billions of buyers and sellers who we know nothing about. And it is their interactions that determine if stock prices go up and down. So yes, in the long term, stock prices will converge with what the fundamentals say they're worth. However, in the short run, like in the past month, we can see anything happen. So can we keep going up from here? Sure we can. We can make a new all-time high next month for all I know. Just because we've been up 30% this month doesn't mean we have to go down. There's no rule saying stocks have to go down from here. So I think that's important to keep in mind. And so I think the most important thing you can do is invest with a clear plan that you know you will follow. That way, no matter if the markets go up or the markets go down, you know you have a plan that you'll stick to and will ride it out whether the markets go up or down. So now the big question for this video is if you should sell your stocks now. And to me, the answer entirely depends on what kind of stocks you own. So I think if you own an index fund, the plan should be to dollar cost average. I think that is the best way to ensure you catch the lows of the market, and over time your average cost should be pretty good. Now, I'm not usually a fan of dollar cost averaging. I made a video a couple months ago saying this would not be a good time to be dollar cost averaging into the market, and I was right, because that's when the S&P 500 was at around 3,200, and we've seen a big decline from there. But I think now stocks are more relatively appropriately valued, and so sure, you can start dollar cost averaging. And in the case of dollar cost averaging, you actually want stocks to go down. As long as you're holding for the long term, you don't mind the stock prices going down, because that will just lower your average cost. So like I said, the majority of stocks in the stock market right now are either too overvalued or too risky for me to be putting my money in. So I focused on three main factors when I have been looking at stocks during this period to invest in. First are companies that are undervalued. And this is one of those criteria that are always there no matter what the market conditions are. I'll never skip over this criteria when choosing stocks. I just think the most efficient way to earn high returns in the stock market is to buy high quality companies when they are undervalued. Them being undervalued is the most important part. And the recent stock market fall has resulted in a decline in prices for many stocks, which gives me a lot of opportunities to look at. If you want to know how I value stocks, check out some of my videos where I do stock analysis, and you will see the different tools I use to be able to value stocks. So the second thing I look at are companies that are high quality. There's plenty of companies that are undervalued right now, but there's no point in buying an undervalued stock when it won't make it through the next year, right? There's plenty of companies that look undervalued now, but they'll be at $0 next year. So I'm placing a strong priority on companies that are high quality. And so what does high quality mean? It means they have strong cash flows, low debt levels, and have a responsible management team to navigate the company through this period that we're facing. So I think a lot of metrics that are important to look at are things like the interest coverage ratio, the debt to equity ratio, and the current ratio. Ratios like these help you determine whether a company is well positioned to manage a time like this where they will most likely be losing money. Probably the biggest thing I hate to see at this time are companies that over the past 10 years have spent the majority of their profits on stock buybacks and now are struggling to even stay alive. They're begging the government for a bailout. For example, Boeing and other airline companies. Things like this show me that the management team only cares about pumping up the stock price in the short term and not giving any thought to what the consequences of that will eventually be. And lastly, I'm looking for companies that have historically thrived during recessions. So everyone talks about how stocks fall during recessions, but what people don't talk about is every recession we have, there are a group of stocks whose earnings increase throughout the crisis. And I think right now is a great opportunity to take advantage of these types of stocks that should be going up, because the truth is everything has fallen in that drop from February. An example of the type of company I'm talking about, the stock Bank OZK, it is the largest holding in my portfolio. And I started this position in Bank OZK in 2019, and I specifically chose this bank because of how they perform during recessions. I knew that we were near the end of a market cycle, and I wanted stocks that would protect me if the economy started going downhill. So the things I love about this bank are they have some of the strictest loan criteria of any bank, and so therefore they severely limit who they lend to only the highest quality lenders out there. They have some of the strictest lending standards I have ever seen out of any bank I've ever looked at. A quality like this will protect this bank during a downturn from the economy like we are seeing right now. And if you go back and look at this company from the 2008 recession, it historically performs very well. In an environment like now, when investors are looking for safety and high quality names, they are going to flock to stocks like Bank OZK. Now, Bank OZK recently had an earnings report, and it was awful, right? They missed earnings by 92%, which is just absolutely awful. However, since then, the stock price has actually jumped by 30%. And so why did this happen? It's because even though they missed badly on earnings, because they had to set aside money to cover their loss provision in case of defaults, but during the earnings call, the CEO specifically said their default rates so far have been much lower than their competition's and are expected to stay lower throughout this recession. And so, investors see that, and it's just that safety that they're looking for. And that's why I think the stock has gone up 30% after that awful earnings. And so I know a lot of you have been asking about a portfolio review from me, and I promise I'll get one out soon. But my entire portfolio consists of only 3 stocks, and I'm confident that these are stocks that will increase in value during recessions like what we are facing right now. So that's pretty much it, guys. There's these 3 qualities, and if you focus on those, buying stocks right now is probably a pretty good idea. Because even if the market falls further, these are companies that will bounce back eventually and go higher than they are now. So thank you for watching this video. Leave a like if you haven't already, and subscribe to the channel if this is the first video of mine you're watching. I come out with stock market related videos multiple times a week, and I will see you on the next video.